Before I start, just to remind you not to rely on any of the many forward-looking statements that I'll be making here this evening. And a little bit of background on us just before I get into the project. So, as I said at the outset, we're not a newcomer to the lithium world. In fact, we've been doing lithium for 18 years. I got this company going 20 years ago. And we developed a focus on these specialty metals and minerals in around 1998. And our first adventure in that realm was our Separation Rapids lithium tantalum project in northwestern Ontario. And that remains one of our core assets. And in the meantime, what we did was we attempted to diversify our asset base to give our shareholders exposure to a broad range of these specialty minerals and metals, recognizing early on that they are niche market commodities. The supply-demand winds can change pretty quickly, and the best way to get into that business is to be positioned with a resource and able to serve that demand when it arises, typically because of new technology creating that demand. And for a time, over the last 10 years, rare earth kind of took center stage because of the China factor and controlling the supply, restricting exports, creating an overwhelming amount of new interest in seeing new rare earth supply come into the market. And our Nechalacho project kind of took the center stage in the spotlight for a few years. But we never forgot about our lithium project, and the East Kemptville tin project we've actually had in our portfolio for 10 years as well. And we're now seeing the benefits of this diversified strategy. As most of you know, sort of the bloom is off the rose with rare earths these days, and but there's not as much interest there as there was, both from consumers and investors. So I've kind of put that project on the back burner for now. We'll monitor the markets and continue to look for opportunities to reactivate it and ways to make it more cost efficient to do so. But in the meantime, we've seen this big surge in interest in both lithium and tin, and I've reactivated those projects and are now making those our current priorities. All those projects we own 100% of. And another reminder is one of the differentiators for our company with a lot of our peers in the space is we have made sustainability a core value of the company for over 5 years now. We're producing our 4th annual GRI compliant sustainability report. We believe that social environmental responsibility will create more value for our shareholders ultimately, create better access to investors, create better access to markets for our products amongst clean tech investors who audit their supply chains to ensure that the raw materials they're using are produced in a sustainable way. And to our investors, I think the key thing is it reduces social license risk, which I believe is currently the biggest risk factor impacting companies' ability to bring new exploration and development projects through to production. And we have a pretty deep management team for a small cap company. We assembled this team over the years as we were working on the Nechalacho project. And it's a great team in that we have all of the basic expertise we need to advance these specialty minerals and metals projects. I mentioned Pierre Nipi. You got to have somebody that can be in touch with the marketplace and customers to find out what their needs are and develop those relationships in order to be able to serve those needs. You won't see a guy like Pierre in the management teams of very many small cap exploration development companies. And the other key technical guy on our team is David Marsh, our Senior VP of Metallurgy. He's actually an Englishman, and like a lot of Englishmen who were educated in the UK, has spent most of his career elsewhere in South Africa and Australia. He joined us 3 or 4 years ago, and he's the person now that will be developing the process flow sheets to figure out how we can most efficiently recover a lithium chemical to serve that market. And you'll notice we have a metallurgist. We don't have a mining engineer on the team. Basically, as Simon mentioned earlier, the mining part is not the critical part of this business. It's a small add-on on the front end of a mineral processing business that produces a specially engineered chemical product for new technology. There's our current capital structure. We have We're now at a market cap of about 15 million. Importantly, we are still reasonably well funded compared to many of our peers. We have just under 4 million in our treasury right now, and sufficient capital to fund us for at least the next 6 months or so on the project plans that we have right now. And I think good access to capital going forward. But as I'll show you here shortly, our market cap basically reflects how the market views us as a rare earth investment. It has yet to recognize the other assets and contribute to, or that can contribute to our market valuation. And so I think our lithium project and our tin project have yet to realize any real appreciation in the marketplace in terms of impact on our market cap. And this is our one-year chart, and it's not unlike a lot of price charts for small cap resource companies these days. But the main point here is throughout the year, most of the volatility in the market, particularly earlier on, was related to volatility in rare earth prices. This is in the U.S., and basically we trade in the U.S. as if we were a pure rare earth play. It does not trade based on any influence from any of the other assets in our portfolio. And so since prices came off, there was a bounce in rare earth prices earlier in the year. That got reflected in some increased investor interest in a higher price. That was sustained through until April, May, when prices dropped. And then you had the news from Molycorp announcing Chapter 11 bankruptcy, which hurt the whole image of the rare earths business in the U.S., has discouraged many investors and given the whole image of the sector a bad image amongst investors. And most have just, in the U.S. anyway, have just given up on rare earths as a investment opportunity for the time being. There was a little bit of a spike in volume here back in late August, and that coincided with Tesla announcing those two agreements, supply agreements with Bacanora and Pure Energy. And you can see, I guess there's a few of our Canadian investors remember us as having a lithium property. So we saw a little bit of a spike in volume there, but it wasn't sustained because I don't think the broader market yet appreciates that we do have this asset. And I think that's important to understand because many of our peers as pure lithium plays have seen significant price appreciation over the last 6 months or so. I picked four here. Nemaska and Pure Energy are two Canadian listed companies. Nemaska has a relatively advanced project in northern Quebec and actually just recently announced an offtake arrangement with Johnson Matthey Battery Materials. And Galaxy and Neo Metals are two Australian-listed development stage lithium companies. And you can see that in every case, they've seen quite a significant move since some of this information started coming into the marketplace over the last 6 months ago or so, from Tesla's announcements and other information starting to come out on the supply-demand imbalance that's emerging in the lithium space. So I would submit to all of you that this is yet to come in Avalon because we are not yet known as a lithium play. And to help people appreciate that, one of the things we're going to do is we're going to rebrand the company. We're kind of introducing the new brand in a modified logo here. We're actually going to change the name of the company to Avalon Advanced Materials to reflect the change in focus to a different group of commodities, and remove the rare metals inc. because rare metals in most investors' eyes means rare earths. And we want to make sure people appreciate that we're not a pure rare earths company. We do have this diversified business. And I think that will help people discover what kind of a business we now are, and we'll start to see that appreciation happen in our valuation of the market as we move into the new year. So coming back to the specifics on lithium, one gentleman asked about brines versus hard rock, and basically the brines are subsurface groundwater resources that are pumped and then go into evaporation ponds to recover a variety of salts, of which a lithium salt is just one. And they were originally considered sort of an unlimited supply, but as Simon elaborated on earlier, they're actually not. And they do require quite a bit of purification to get the lithium into the level of purity that can actually make it usable in the battery applications. And then the hard rock deposits are typically in highly evolved granitic pegmatites. And there are three minerals that contain lithium that can be recovered as lithium ore minerals: spodumene, pedalite, and lepidolite. Spodumene is the most common one. That's produced by Talison, Australia, and a number of others. Lithium is actually pedalite is the rarest of the three, actually, and it's the one we have at Separation Rapids, and it has traditionally had a niche market in glass ceramics, and it still does. It's the preferred source of lithium for thermal shock resistant glass, a market that we saw as an opportunity early on and still represents an opportunity for us. But we are obviously pretty excited about the opportunity to serve this battery sector as well. So from those deposits, there's the two basic lithium products, lithium chemicals. Lithium minerals for glass ceramics is still a not insignificant market. Equated in LCE terms, it still represents about a third of the total market demand for lithium in total globally. And it's a steady growing market, not growing at the same pace as lithium chemicals in the battery sector, but still a very strong basic market for lithium minerals. Lithium chemicals now represent another third of the market, but obviously that's going to grow in proportion to everything else because of this overwhelming new demand from the battery sector. Briefly on the lithium minerals markets, that's the property that lithium imparts, is thermal shock resistance, and it finds application in thermal shock resistant cookware. Corning's famous Corningware cookware was invented using the lithium mineral pedalite. And recent innovations include glass ceramic stovetops, saran, for example, and fireplace shields. And those continue to be strong markets for lithium minerals, and they prefer to use the mineral in these applications because the mineral form includes two other key ingredients they need in the glass batch, alumina and silica. And it also has other technical benefits that help them make the quality of glass ceramic product that they're looking for. And as I said earlier, it remains a pretty significant market, and one that we think we have an opportunity to serve going forward. There's only one producer of pedalite in the world right now. It's a mine in Zimbabwe that has been around for a long time, that has served notice to its customers that it cannot ensure them of a reliable supply in the long term, and that's created an opportunity for us to serve that market because our resource at Separation Rapids is the only known large reserve of the rare mineral pedalite in the world of any size. And that's what it looks like. This is a photo that was taken back around 1998, shortly after it was discovered. We acquired it, we started doing some work on it, and so it wasn't as well exposed as that when we first found it, but it was perched on kind of a top of a low dome-shaped hill and relatively easy to clear off the overburden to expose it for detailed mapping and sampling. And obviously with that sort of geometry, about 70 meters width on surface, it's readily amenable to open pit mining, and basically everything you see in white represents the pedalite pegmatite and would be mineable to recover that mineralization. Here's where it's located. It's in northwestern Ontario, near the border with the province of Manitoba. Here's the city of Winnipeg here. It's about 60 kilometers north of the community of Kenora, a community of about 15,000 people, served by the major railways, Trans-Canada Highway, and traditionally this has been an area where the forestry industry has been the dominant industrial activity. It's in decline, and as it is in a lot of places, and they actually do need some new industrial development there. And Separation Rapids is one of the few possibilities to serve this local area in terms of brand new business to support the local economy. And we already got road access. These are logging access roads, and we built our own access road in there several years ago. So we already have pretty good access. And furthermore, there are 2 hydro dams on this river system here that offer the potential to provide us with low-cost hydropower. One dam is only about 35 kilometers away from the site. And this community of White Dog is a First Nations community, a community that we have a very good relationship with and are committed to partnering with them in the development of this project. And they are very supportive of mineral development in their territory, as is the broader community in the Kenora area. Here's kind of a summary of the history. I won't go into it in great detail, but it was first discovered in '96, and we did a lot of work on it in the late '90s based on this discovery of pedalite, which at that time was needed by Corning to make their Corningware cookware. They had actually been looking for a pedalite deposit in North America to serve their plant in the United States for 25 years, and they never found one. And so when we found this, they were obviously interested, and we were obviously interested in them. So we were moving forward with the idea of serving them with their needs for pedalite. But sadly for us, Corning made a decision around that time to exit the cookware business. They sold it to new owners who decided to shut the plant down in Martinsburg, West Virginia, moved the production to China, and that kind of changed that business opportunity for us rather abruptly. So we had to put the project on hold, and we've looked at it ever since for other possible markets. We looked at it for tantalum for a while. It does have tantalum as a potential byproduct. We looked at other potential lithium mineral products for other markets, none of which provided us with a good opportunity until just recently, when we had this renewed market interest from glass ceramics companies looking for an alternative to the source of pedalite in Zimbabwe. And so we restarted the project in 2013 to look at providing those companies with their needs in lithium minerals. And in so doing, we started to recognize, well, maybe there's an opportunity here to serve this lithium chemicals business too. Back in the late 90s, the lithium-ion battery was still a pretty new technology, and it looked like the brine resources in South America would be able to serve that for a long time at a low cost. So we didn't really think we could compete in that market. But it's a new world now, as Simon has explained. And one of the benefits of this resource, one of the aspects of it that makes it potentially attractive to make chemicals from, is that the mineral contains no impurities. That's why it's attractive to the glass industry. They're very sensitive to any element impurities that can discolor the glass. And it has none unless you introduce them in the milling process. So we reason that by not having any impurities in this material, it will be relatively easy to remove the impurities to get to the levels of purities that the battery manufacturers now need. And so that's where we're headed here now. I brought this in the First Nation I mentioned. We have a good relationship with them. We signed an MOU with them all the way back in 1999 and renewed it in 2013. And one point of interest is if you follow the news in Canada, you are aware we have a new government, federal government, a Liberal government. And this guy in the background that attended our signing ceremony back in 1999, his name is Robert Nault. He left politics about 12 years ago, and he ran for re-election just recently, and he was re-elected as the new MP, returning MP for Kenora, which was good news for us because we have a good relationship with him. He is very familiar with the project and the First Nation, and has been supportive of its development all along. And having someone being your regional MP and in the government is always a good thing in terms of getting support from government to move your project forward. Briefly on the resource, so we haven't done any drilling on this since 1999. We drilled it off then and defined a resource in the order of 11.6 million tons. It's being updated now for compliance with 43101 regulations, but it never was about finding enough tons and grade. 11.6 million tons was more than enough to serve the market that we had at the time, so we just stopped drilling. But it remains open to depth and along strike for further expansion of this resource once we feel the need to do so. But at this point in time, it's fairly well defined, very continuous. These are not erratically distributed mineral deposits. It consists of about 25% petalite throughout it, and it's just a matter of drilling holes to define the geometry of the resource to define how to mine it. And it's a vertically dipping body, so fairly simple geometry. It's basically a vertical sheet. It pinches and swells in places, and where it's exposed at surface is in one of those swells where it gets particularly wide. Unfortunately, it's exposed at surface to make it easy access. Ultimately, we'll probably transition into an underground mine once we've mined it to a depth where the strip ratio makes it prohibitive. But a very continuous mineral deposit. The key characteristics of this are that petalite is the mineral, and it has those markets I explained. The very, very low content of impurities, notably iron, that is a contaminant in glass, amenability to low-cost mining, and potential for other byproducts. Plus, these pegmatites are mineral deposits that don't have any hazardous waste associated with them. There's nothing radioactive in it. There are no sulfide minerals that create acid rock drainage. So no environmental issues associated with any waste materials. And many of the other minerals in the ore are potentially usable industrial minerals byproducts. And one of Pierre's tasks over the next year or so is to find markets for all of the minerals in the ore so we don't have any waste, actually. And that's indeed possible because all these minerals have no impurities in them and can be used in a variety of industrial minerals applications. So we started our test work again in 2014 with the view to serving this glass ceramics market. Revisit our process flow sheet. We engaged a service provider in Germany called Anzaplan that are a specialist in industrial minerals process development. And we made some modifications to our flow sheet with the benefit of Dave Marsh's expertise, and actually we're able to produce an even better quality concentrate than we produced originally with less than 0.01% iron. That's remarkable. You won't find that easily. You won't be able to achieve that easily. And so with that sort of low iron content, it proved to be very attractive to the glass customers that have expressed interest. And so they've tasked us now with producing a larger quantity, which we have underway right now. And then the other thing we did is we used a little bit of the concentrate we had produced in those initial trials to leach it to see what was involved in producing a lithium chemical for this new battery market. And the initial results were very encouraging. It leached very easily and produced a battery-grade lithium carbonate right off the bat without any effort to optimize the process. So what that's telling us is that this low-level impurities is a real benefit in getting to the grades required in the battery industry now. And we see the potential because this getting to a battery grade or 99.5% purity was relatively easy. We probably can get to a 99.9 enhanced grade without too much difficulty. We call it enhanced grade. I don't know if that meets your technical grade you were talking about earlier, Simon. But we make the observation from the little bit of market development work we've done that the market's tending towards ever higher purities because, very generally speaking, the higher the purities, the better the performance of the battery at the end of the day, or the fewer impurities, the better the performance. And the other trend is towards increasing use of lithium hydroxide as a way to achieve those higher purities. And we have demonstrated at a very early stage that we can make lithium hydroxide too, and probably very high purity as well. And so the next steps we're working on are better defining under Pierre's leadership exactly what the market would like us to produce, remembering that we'll be probably entering this market 3 or 4 years down the road. And what we want to know is what the market's going to want then, not right now, and that might be something different than what it is today. As Simon elaborated on, this business is changing quickly. Each of the individual battery makers have their own specific chemistries for the cathode and raw material requirements. And so we've got to have a good handle on that in order to design our process flow sheet and meet the needs of tomorrow. And we are taking that into account right now and doing that work. So we have that work underway at the moment, and that'll allow us to complete an updated economic model for the project over the next 6 months or so. So what we have going right now is, as I said, we drilled this off years ago, so this is not a drill hole play. We're not doing any drilling. We hadn't worked on it for a while, so we had to reestablish our access road, which we did this fall. And the other thing we have going at the present time, we're spending $750,000 on a pilot plant program to produce about a ton of the lithium mineral concentrate petalite. That will serve two purposes: provide test samples to the customers in the glass industry that have expressed interest in this material, and provide us with more concentrate to use for the next stage in lithium chemicals process development. So that work will be completed probably in January, and then we'll get the lithium chemicals work going then. We've got the service providers already lined up to do that. And then we'll be able to model what that looks like from an economic standpoint and do an initial PEA on the lithium chemicals business and integrate that into our overall development model for the project. And then everything that looks good on that front and we're able to access the capital, we will go forward with a larger bulk sampling program and pre-production development program over the next 2 years. So this is kind of how we see the work evolving from here, and we have to define exactly what the market wants and see what it's going to cost us to do that, and that's the big challenge for us in the first half of 2016 is to get that work done. We have sufficient funding and the expertise and service providers to do that right now. Then we're going to start planning for that larger scale pilot plant to produce a larger bulk sample. To actually get an offtake agreement in place with the glass companies, you need to provide them with a large bulk sample in the order of hundreds of tons of product. And that's obviously a bigger undertaking to do that. They need it to be able to do a full production trial on it to confirm its acceptability. Once they do that, then they'll give you a firm offtake agreement for the longer term. Then we got to work with the local community on a number of things, including how to access low-cost power for the project to make it as attractive economics as possible, and start working on some of the logistics around potential sites for the plant. We could put that lithium chemicals plant right at the project site, or maybe somewhere else, depending on the costs associated with that, access to power and labor, etc. Industrial minerals, while it's sometimes a hard business to get into, once you're in and you're supplying a customer under a long-term contract, it's steady, reliable, predictable revenue as long as you can reliably supply your customer with that material. And the lithium chemicals business would obviously offer all the kind of upside and growth potential that we're seeing in the lithium ion battery business. So combining those in the same operation, I think, reduces the investment risk for investors going forward by having twin markets for the product from one operation. So that's how we're looking at it right now. What that balance will be, we'll have to see where the best margins are in the combination of the two that addresses both the risk profile and maximizes the margins and returns on investment to our investors. Yeah, I know many of you here heard my presentation on tin earlier this year. Well, I've already talked about tin once today. I thought I'd just briefly update you on the status of the project before I sit down and we take some questions. As most of you know, we're looking at trying to revive tin mining in Nova Scotia at a site called East Kemptville that was a producer in the late 1980s, early 1990s. And closed in 92 only because of the crash in tin prices that happened in the late 1980s when the international tin cartel disbanded. It was closed and has remained closed since then, although most of the resource remained in the ground as an opportunity going forward. And so we have been studying that and looking at possibilities on how to bring this back into production. And we have been spending money on reevaluating the whole site with the view of models for redevelopment and economics around that and development scenarios and better understanding the resource and what we have to do to take on the management of the site. As a closed site, there are environmental responsibilities there to treat the wastewater and make sure there's no acid rock drainage. It's very well managed at the present time by BHP Billiton, the current managers of the site. But it's part of the whole model in terms of how we would redevelop the site in a responsible way going forward. So this is a picture of what it looks like right now, and the old mill was over here. These are all tailings, partially revegetated. These are unused tailings dams that are part of the water treatment system now. And these were the two pits that were developed at the time, the main zone and the baby zone, a subsidiary deposit. And then these are other exploration targets that we have been looking at as opportunities to expand the resource. So what we're looking at now is getting to at least a PEA in the short term and then moving into feasibility. And we're looking at different development scenarios. When I was last here, I talked about the large scale scenario, which basically recreates the same sort of size of operation, an open pit mining operation that was how it was originally operated by Rio Algom Limited. And so we did an initial study on doing that. It's a fairly large capital investment now to rebuild that mill and do that. Our initial estimates are in the order of $200 to $300 million. A challenging amount of money to raise in the kind of capital environment, markets environment that we're in right now. But that may be how we should do it in the long term. But recently we've been sort of looking at other scenarios in terms of developing this thing as a small-scale operation in the short term. And there's an opportunity there to restart production in a small way because on that site, this whole area here is actually a stockpile of low-grade ore that didn't meet the cutoff grade there historically. And there's some 10 million tons of it there in aggregate. And that represents a resource that basically is ready to put in a mill to start processing to recover a tin concentrate. And so we're looking at that possibility right now and playing around with some numbers. These are very back of the envelope numbers. They haven't been substantiated yet, so I must remind you not to rely on them. But just to give you kind of an idea of what's possible here, if we were to do something at 1,200 tons per day, you might be able to build a plant for $10 million that could make a tin concentrate fairly easily and generate some 300 to 400 tons per year of tin concentrate for a market right now that is receptive of additional supply of tin concentrates, especially if they're originating from a source that is not a conflict zone, being wary of the fact that tin is a conflict mineral, and consumers have to make sure they're not relying on sources in conflict areas such as in Central Africa. So we're starting to see what the possibilities are to develop something on a small scale that would allow us to get into production relatively quickly and get in the business, and then look at potentially expanding the operation going forward as market demand is created for us and the opportunities arise. So that's another advanced project that we're working on. Both of them represent really good opportunities, and it's another reason to take a good look at this company right now. With the benefit of 3 advanced projects, I think we offer a reduced risk profile to investors going forward, particularly given our current market valuation. Thank you very much for your attention this evening.